Today, asset owners and all investors are really trying to understand the backdrop of the very dynamic world in which we're investing. And I would say there's a couple of key themes that our clients are looking at. One of those is just the overall volatility in the market. And the second is, will there be a profound and sustained change in the way the markets operate as we go forward? And I would say most clients are in a bit of a wait and see approach. There's a bit of a let's see what happens. Let's not make any significant changes right now. Asset owners are very invested in the long term and looking for sustainable and diversified growth to meet the needs of their beneficiaries and their underlying clients. And so I think many clients are really focused on learning about what's happening. And so State Street's been bringing some great thought leadership. We have a tremendous research arm through State Street Associates and a great partnership there. And we've really been working together to bring clients thought leadership real time about what's happening and changing in the markets. One segment of clients right now that is really bracing for change is in the endowments and foundation space, particularly the endowments, where under the proposed tax bill that's going through, there's likely to be some significant increase in taxes impacting these endowments. And State Street has some services that we can help offer to these endowments to help offset some of the challenge that they're working through. So some of those include our securities lending through our markets team to provide some incremental revenue. Another is really liquidity. So our prime services have great access to liquidity, whether it's primary or secondary or contingency liquidity. A number of those things are really coming into the forefront specifically for the endowments at this moment. Have been joking to a couple of people. If somebody looked at their portfolio on April 1st and then somebody looked at their portfolio today, they might think that nothing had changed. But alas, we all know the world is a very different place. And there's a couple of things that times of volatility really bring to the forefront. So performance management and risk management become increasingly important in times like this. And we've been seeing a change in the asset owner space for a little bit of time now, whether we call it total portfolio approach or whole of fund approach as we do in Canada. Investors are thinking about their portfolio in a different way. So traditional models would suggest you allocate X percent to, equities, to fixed income, to private equity or to alternatives, and then you manage that asset class and the risk from an asset class perspective and the performance from that asset class perspective. And the total portfolio approach really turns that a bit on its head and says an investor wants to look at the entirety of their portfolio and understand the factors that they are exposed to across all of those asset classes and what impact exposure to those factors might have on investment outcomes, whether that be performance or risk management. And so really what we've been seeing over the last couple of years is this trend toward a total portfolio approach and to really thinking about all of our holdings. What I'd say is moving to that approach can be a little bit challenging. It's a little bit hard to execute. It's much easier for me to sit here and talk about it than it is to have the toolkit to be able to actually drive that approach. Because at the end of the day, investors still want specialization by asset class to be making those investment decisions. And so really a lot of our clients are starting to think about this as a bit of an overlay or a lens to view their portfolio. So they're managing in a bit of a hybrid space where they've still got, teams who are looking at individual asset classes, but then they're looking at a bit of an overlay to make sure that they understand the underlying factors and how those are exposed across the entirety of their portfolio, not just within equities, within fixed income, within alternatives. So this idea of public and private investments is not new to investors. For a long time, asset owners have been allocating large portions of their investments to alternatives. And so what we really see is this balance of public and private investments and a need for asset owners to see their portfolio across publics and across privates. And State Street has some tools to enable them to do so. And that's been a theme for some time. But what we see is that the public markets in particular provide great access to liquidity, right? Because daily liquidity effectively. And the private markets have historically provided greater returns for higher levels of risk. And, some of the thinking now is sort of taking a look at that, and is that still the equation as we go forward? And how will clients continue to think about their allocation to public versus private as we go forward, especially as we start to see those two blend, or we start to see product where within a public market we can offer access to some of the private markets. And that's certainly been a big trend in the market, and a lot of experimentation. The public markets have provided great investment returns for a number of years, and we expect that they'll continue to. I think private markets have continued to provide different levels of return, whether it's private equity, private credit, infrastructure, real estate. Clients are looking at their allocations to those asset classes and refining some of those allocations to really drive sustained, diversified growth for their portfolios. And that's really the name of the game that investors are trying to focus in on. And so I think that there will continue to be a balance of the two, and both play a very important role in constructing a portfolio for the long term. And that's where asset owners are focused. Collaboration in this portion of our industry is really important. And frankly, that's one of the things I really like about working in this space, is that, asset owners and investors are not looking to compete with one another in the asset owner space. We're looking to learn from one another. And so what I find is that there's great value in being part of the asset owner community, and in particular, the asset owner community here at State Street. And we collaborate really closely with our clients. Sometimes we collaborate with multiple clients on a particular topic. We enjoy bringing together our clients to have conversations, whether it's about relevant topics like some of the changes that are happening in the tax space that will impact endowments, whether it's about how clients are implementing things like the total portfolio approach. One of the things State Street can do is bring together like-minded investors to have conversations about how we're working through things. And we do that across all of State Street, across markets and regulatory affairs team. And we really do that to try to bring a conversation across our clients and bring value to our clients of being part of the State Street asset owner community. I think the other piece is that we partner with some of the consultants in the industry as well. Consultants are an important part of the asset owner industry, and they play an important role. And they have some great insight into where and how we're moving forward. And we see that as an important partner as we move forward and kind of advance our strategy for kind of continuing to evolve and provide the dynamic needs, or to meet the dynamic and changing needs of asset owners, whether it be product investment, technology investment. All of these come from dialogue and partnership and collaboration with the community, both our clients as well as consultants in the space, as well as regulators, right? And really understanding the regulatory regime and where things are going. And that helps us to allocate our spend to continue to deliver products and services to meet the needs of our clients.